program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Good to have you with us again here at AusBiz. Let's check in on what happened overnight. A negative session for equity markets. Investors worried about the path of interest rates, while on Wall Street, Nvidia's results loom large this week amid concerns about an AI bubble. All the majors there on Wall Street losing ground as that session progressed. And more than 90% of companies in the S&P 500 have now reported third quarter earnings. 83% of those have delivered consensus-beating results, that's according to LSEG data. Among the day's gainers, Google parent Alphabet rose to a record high after Berkshire Hathaway revealed a stake of $4.3 billion in the company. Berkshire also further reducing its stake in Apple, which saw its shares fall. Among the other decliners, Dell fell heavily after Morgan Stanley double downgraded its rating on the AI server maker to underweight from overweight. Now, aside from Nvidia's results this week, results also due from the retailers Home Depot, Target and Walmart, which are expected to reveal the state of consumer demand in the States. And shares of lithium companies jumped higher after Ganfeng Lithium Group forecast demand growth of between 30 and 40% for the battery metal in 2026. Albemarle climbing to its highest level in more than 15 months. Well, a flood of data that was delayed during the US government shutdown is due to be released this week and is expected to provide detail on the health of the world's largest economy, with September non-farm payrolls due on Thursday. Meanwhile, market reaction to President Trump's tariff U-turn on more than 200 food products has been muted, with some analysts saying the move was not a surprise due to the cost of living issues caused by the levies. US construction spending unexpectedly rebounded in August on an uplift in home renovations as high mortgage rates dissuaded Americans from buying homes. And across the border in Canada, the annual inflation rate in October eased to 2.2% as food and fuel prices dropped while mortgage interest costs came down below 3%. US Treasury yields have edged lower as traders consider if the Fed will cut rates next month. The yield on the 2-year was at 3.6%, the 10-year falling to 4.13%. The US dollar has firmed, the Aussie has fallen below 65 US cents. In fact, it's right on it at the moment. Oil prices have eased as loadings resumed at Russia's major export hub following an attack by Ukraine. Brent crude futures at $64 a barrel. Copper's fallen further, down another 1%. Iron ore rising 1.5% to 104 US a tonne. And gold fell more than 1%, pressured by a stronger dollar. It's currently at around 4,040 US dollars an ounce. And Bitcoin has continued its descent, currently sitting around 92,000 US dollars. Well, for more on US markets, Steve Sosnick joining us again from Interactive Brokers. Steve, welcome home. Of course, you were just down our way. In fact, I see you made a new friend.
I did indeed. Well, I made several new friends, and it was great to be in touch with old friends. But yeah, that was my new friend that I made. That was at the Australia Zoo, Steve Irwin's family's wildlife park. So it's not like I'm out in the wild with meeting kangaroos. That was a fairly controlled environment, though. But in general, it was good to get a different perspective. It was very interesting for me to be waking up when the markets were, nearly closing. And so, it was good to take a little bit of perspective without being there, every day absorbing this stuff and sort of taking a step back and saying, okay, what's moving markets in a broader sense, on a day-to-day, week-to-week basis rather than my usual minute-to-minute focus.
All right, so what sense are you getting, and now you're back there too, in terms of where sentiment sits right now as we head towards Christmas?
Sentiment is getting a bit more nervous. One of the things that struck me about being in Australia is you guys skip right to Christmas. We still have Thanksgiving to reckon with in terms of major holidays. And that's when we, here, that's when we gear up for that sort of stuff. And we'll get a look at maybe how customers are thinking about Christmas when we hear from Walmart and Target and the likes of them, as you alluded to at the top of the show. But I think in general, there seems to be a little bit of a risk off type of mentality, a little bit of a change in the perception that all risk is good. In a sense, we spent the better part of 2+ years in an environment where the more risk you took, the better you did. And I think at least in the past couple of weeks, and certainly today, the mentality seemed to be that, okay, maybe risk works both ways.
Well, Steve, now, of course, the big event this week is Nvidia. How much of a risk event is that, given what we're seeing with the AI trade at the moment, and of course, ongoing talk about an AI bubble?
I've been saying this for several quarters, that Nvidia is the single most important earnings release that we get during any given cycle. The reason for that right now is because the bull market is clearly being driven by AI, and there is no more central stock for the AI thesis than Nvidia. It's at the root of everything. If there's a deal to be made among the Mag 7, it involves Nvidia. These are literally all their customers are the other Mag 7 stocks, and whatever Nvidia does, influences whether Broadcom or AMD or some of the other semis are going at it as well. We're also in a situation where, as a result of some of the pullbacks, we see on the chart that you just put up that the S&P 500, at least in the last couple of weeks, it didn't take out its old high. We're sort of flirting with the bottom end of the channel. We're flirting with the 50-day moving average, which we actually kind of broke through fairly substantially toward the end of the day. It doesn't mean that the trends have shifted, but if we get a bad report from Nvidia, the trends will have definitely shifted negatively. If, on the other hand, they manage to support a surprise in the upside, and options are basically not skewed in either direction, meaning there are still who do not want to miss a potential rally. If they can put in the good numbers, that will probably change this risk-off sentiment back to risk on and full steam ahead on the AI trade.
Steve, I know you've also got your eye on the bond market. What are you seeing there, particularly the US 10?
It's actually been rather stable. It's kind of funny, it's about where it was when I left 2 weeks prior. I think a lot of that will have to depend on whether, on what the jobless numbers are. For both the 2 years and the 10s. The chart you have up there shows the 10-year futures actually, so we have them on the same direction. That's the red-green candle. The blue is the S&P 500. The NASDAQ 100's on the bottom, and you can see how they performed basically in the 2 weeks I was gone. Not too much to report there. A little bit of a decline, maybe more in NASDAQ. But I think there, we're going to have to see what happens with the payrolls numbers on Thursday. They came a little bit out of the blue. We're not expecting too much in terms of surprises. A 4.3% unemployment rate, jobless claims in the low to mid single digits. I think the estimates are still coming in a little bit here. But the market has backed off perceptions of a rate cut. And I think that's also changed the risk sentiment. I think we went from, the Fed is definitely going to be in this cutting cycle to maybe the Fed is watching and waiting the same way everybody else is. And the jobless numbers will go a ways toward that. It's tricky because the worse the number, the more likely the Fed is to want to cut in December. On the other hand, when you start to get into rooting for bad numbers, I always have to caution, be very careful what you root for.
Steve, how well does crypto reflect sentiment at the moment? And I see you made the point, actually, you went to a crypto conference just prior to your leaving. What are you seeing, particularly with Bitcoin, obviously, given that has continued to fall in recent times?
I've seen crypto as a bellwether for basically market's risk tolerance. And, because essentially, you don't have earnings. With Nvidia, I mentioned that, it's a key bellwether, but we, you and I are talking about earnings and revenues and things that can be measured. Bitcoin is really just what someone is willing to pay for this. And it's changed a bit more to a store of wealth and for many people's perceptions, but it is still basically a tool for speculation. And the crypto conference you referred to was, just again, it was probably a couple of days before I left. One of the things I failed to really appreciate was I was invited to speak at this conference largely because I'd been sort of cautionary about the idea of crypto treasury companies, the idea of spending, $2 to buy shares in a company that was, had $1 worth of Bitcoin on its books. And I thought that was kind of foolish, and that trade did sort of unravel. But I thought I was being brought in to sort of be the old crotchety dad to speak to this. And it turns out I was around the median age at this crypto conference. And I guess what I should have realized at that point was you're talking about people who are viewing this as yet another investment, as yet another way to earn returns, not because they really fundamentally believe in the prospects of crypto or the evangelical nature of it. It's basically, this thing's been going up and we hear great things about it, and we see great things about it, and we can invest in it now very easily through ETFs, and let's get in. And that really should have been my signal that it was a turning point, because if you're getting the gray hairs getting into crypto, it's telling me that the trade is getting a bit long in the tooth. And while it's down for the year, it's still up substantially since the election just over a year ago. It had a huge run up right around the Trump election. So you're still playing with house money depending on when you bought it, but it is definitely telling us a sign that the nature of the speculation is narrowing, and I think the market focus is tightening, and that gets a little tough because we want more of a broad-based rally, and maybe it's good to see some of the speculative fever getting washed out a little bit, but Bitcoin is telling us that the desire to speculate is ebbing, at least in the short term.
Steve, good to catch up again. Hope you keep the jet lag at bay. Thanks for joining some Interactive Brokers.
Thanks so much, Andrew. Talk to you soon.
All right, let's focus on the local market just ahead of the open here on this Tuesday. Reflecting what we saw on global markets overnight, SPI futures off by around 0.75%. We're also going to get across a number of results today, market updates there, and also a lot of AGMs to get across as well. Join us in just a couple of minutes.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.